Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Hello, everyone. I'm Anthony Sykes, and I welcome you to the Rant Radio Network. Give me a call. I want to hear your questions on taxes and what you have to, what's on your mind tonight. Call me at 855-693-4897 or email me and I will answer your question on next week's show. My email address is asykes, S-Y-K-E-S, at sykesaccounting.com. I also invite you to look at the website. That is www.sykesaccounting.com, and look at our tax tips. They are very insightful, and I hope they're helpful. We have a wide range of information on there that can help you, whether you have a business or not. It's designed to help anyone, not just taxes, but also in finances. It's a good overview. Now, the show is designed to cover taxes. We talk about taxes. Also, we talk about business. I want to cover in the future not just taxes, because really after April 15th, people kind of put taxes to the back burner until next year. And actually, you really shouldn't do that. Taxes, you should always kind of plan through the year for what you're going to have in taxes in order to reduce them. Again, remember, it's not how much you have, it's how much you keep of what you have. But what we do, what our mission is to help you reduce your taxes, help you pay the lowest amount legally possible, and also give you tax tips and business tips. If you're going into business, there are different ways to start a business, and truly creating a business is one way to become self-sufficient, or I'm not going to say rich, but at least that takes the uncertainty of, are you going to have a job in this uncertain job market? Now, I want to talk. Got an email. Excuse me. I got an email last week from George, and George wanted me to cover identity theft, and that seemed to be a timely topic because I have kind of a story I'll talk about in the next section. But identity theft. Identity theft is a very hot topic for IRS as well as for all of us, but IRS has set aside some 3,000 personnel. They've created a whole new department just to deal with identity theft. Now, how we see identity theft is a little different when it comes to tax returns. To give you kind of an overview, someone may steal your social security number, and unlike what normally happens, and that could also happen they don't necessarily go out and open up credit cards or get loans or anything like that. What they will do is a little more ruthless, I think. They will use a couple children. They'll get their social security numbers and birth dates. They will create or may create a W-2, a false W-2, or a false Schedule C or sole proprietorship, and use that Social Security and those two or more minor dependents to generate a tax refund. And that refund is anywhere between $8,000 and $10,000. So you can see that adds up to real money depending how many times you use that. Now the problem happens for you in particular when you go to file, not if, but when you file your tax return. IRS looks at it, they say, hey, what are you trying to do? You filed already, we gave you a refund, now we want that money back. So you have to go through this whole process of proving of who you are and that you did not file this tax return, and that takes months. Um, IRS has got the process down now since they've created this division to handle identity theft, but it still takes a few months before you are now known as you with the IRS. And what they will do is issue you a PIN number so that when you file your taxes, that PIN number is on those taxes, and that's how they know that you are whom you say you are. Um, some quick tips that come from IRS: guard your personal information. That kind of goes without saying, but let's kind of talk about that. Sometimes if you're getting a loan or you're refining your home or something, you have to give out that information. And unfortunately, that may be where it gets in the hands of unscrupulous people. We don't know. No one knows how they steal this information. But as best you can, do not give your ID number to anyone unless you need it specifically for something, such as, again, applying for a loan, or you need it to do something that requires your social security number be given. Try to make sure that you know whom you're dealing with as much as you can, and the organizations that you're giving this number to, again, as much as you can, so that you can try to help IRS backtrack to where your identity could have been stolen or your social security number. Now, another is watch for IRS impersonators. It not so much that they come up to you and flash a phony badge and say, "I'm IRS, I need some information." What usually will happen is you'll get a phishing email, something from IRS that says, or purportedly from IRS, not IRS itself. They will not send you an email, but it will be an email that says they are the Internal Revenue Service and that you may have a refund or that they have a question on your taxes, and they want you to fill in some personal information. That should be a key right there. IRS will never send you an email asking for personal information. One, because they have it. They will always send you a letter, and now the letters coming out normally only show the last four digits of your social security number for those purposes of your privacy. Another thing that may happen, sometimes there is someone who calls up on the phone and says they are from the Internal Revenue Service. Now, you do have to be careful with this because IRS will call you if and only if, one, you owe money or you haven't filed some tax returns, and quite possibly if you have filed and there is a question they have on it. If you look on the back of on page 2 of your tax return, there is a section that says, may we call you, and here's a number, a daytime phone number, to clear up any questions they may have on your taxes. So what you do in this case, if anyone calls you from IRS, and particularly anyone you don't quite believe, or even if they don't sound quite real, ask for a callback number and then call that number and see if you get the Internal Revenue Service. You can also look up online and see where the local office is and ask if someone had actually called you. It'll take a little bit, but they will say, yes, so-and-so was trying to get in contact with you. Or if you call IRS directly on their 800 number and say, is someone trying to reach me? they will let you know if someone is trying to reach you. I would advise you do that. It is a little longer, it takes a little more time to do, but that's something that can protect you from a lot of grief down the road. The next thing that I have seen, and this is quite recently, is the Federal Trade Commission scams. And I guess it's just me because it's been out there for a little bit. But emails, they're phishing emails just like the IRS emails from the Federal Trade Commission. It's generally aimed at businesses, small businesses, and they say a complaint has been filed against you. And if you want to answer that complaint, go to this, click on this website. So if you do that, unfortunately, they may put malware or some kind of spyware on your computer, and then you have a problem. So beware of that. Again, if you get something from an email from the FTC, it's not something that they send out. Normally, if there's a question or if someone has filed a complaint against you, you will receive a letter. I happened to experience that one myself, and that was quite interesting because I looked at it, and on the face of it, the everything took me right to the FTC website. But I've been in this business long enough not to trust anything. I know when it's a government agency, they will send you a letter. And I never received a letter. Therefore, it must have been false. And even if I made a mistake, they will always send you a second letter saying, why did you not respond to the first letter? So always be aware of that. When it comes to government agencies, they do not send emails. So we'll talk a little more when we come back. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
We are the Three Guys Rant
with Arvin, Mike, and Phil.
Coming to you on the Rant Radio Network every Monday from 6 to 8 p.m. Pacific Standard Time. You can call us at 855-69 The Three Guys.
It's not the Three Guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69 3 Guys, Guys, and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
What up, foodie freaks? It's Chef Bev Lazo with the Culinary Trend Show. Join me and my brigade every Thursday night from 8 to 9 p.m. where we will be cooking up some crazy stuff that will give you the appetite for discussion. It's all about the good food, good friends, and good times. Only here on RantRadioNetwork.com.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on RantRadioNetwork.com. That's RantRadioNetwork.com.
Check it out.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on RantRadioNetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
Looking for a delicious, fresh family meal that's ready when you are and easy on your budget? Welcome to Piara Pizza. We make our pizzas with handmade dough, 100% real cheese, and tomato sauce blended with our own spices. Nothing is ever frozen. We always have large pepperoni and cheese pizzas fresh and waiting for you for only $5. Or choose one of our specialty pizzas. We have veggie, meat lovers, supreme, and Hawaiian. Add an order of our amazing hot wings, cheesy bread, or breadsticks. Our locations are ultra-modern, ultra-clean, and open 7 days a week. Visit any one of our locations today, or check us out on the web at www.piarapizza.com. Piara Pizza. Fresh, hot, and ready for you when you come in. Stop in for your Piara Pizza today.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, everyone, to rantradionetwork.com. Give us a call. We'd like to hear from you. 855-693-4897, or send me an email, asykes@sykesaccounting.com, and I'll answer your question on air the following week. Now, we were talking about identity theft, and it's kind of a close subject to me, and I'll tell you about that in a minute. I wanted to finish up with one last item, and that how to protect information on your computer. We all use our computers for everything nowadays, and even our cell phones, which in some cases are replacing some types of computers we may have, either a laptop or a desktop, depending on what you do and how you do it. There's also the tablets that are out there. Now, what IRS suggests is that you keep all your personal information on a flash drive, so that if you do need it, you can put that flash drive into your computer and then use it remotely, so that if anyone is breaking into your computer or hacking your computer, I should say, that it won't be there. That seems to be a good idea. If you know of anything better, hey, give me a call. Now, what I'd like to talk about is something that happened to me recently, and that is a new type of scam, a new type of identity theft that's kind of comes and goes. But what's happened is someone has used my company and opened up a merchant service and has debited other people's accounts. Now, how can that be done? Apparently quite easily. Couple ways you can do it. Since my company is a corporation, you can't really use it in California because the Secretary of State will not allow that. Throughout the country, maybe you might be able to create another corporation. More than likely, though, someone creates a DBA, that's doing business as, and they then go to a merchant service company, open up a bank account using that DBA, and now they're in business. But how do they get the information? Well, this is large-scale hacking. These hackers have to be pretty good. They will hack in or maybe buy a list from the underground, however it works, and now they'll get a list of bank accounts or debit card accounts, and they will begin to debit. And what's worse is the money goes into that bank account that had my name on it, and then it is wired out to wherever it is out of the country. Then, if someone calls, they call their bank and say, hey, I didn't authorize this withdrawal from my account. Who did this? The bank will look it up and say, oh, well, you bought something from Anthony Sykes and Company. And now they have my information, and they will call my phone number and say, well, I didn't do this. I want my money back. So it can get pretty interesting. Now, they haven't gotten any personal information about me or my company. What they've done is just gone to the website and got my name, my company name, my phone number, and my address. You can look that up on the internet. So they use that, and now I become the scapegoat for them taking monies from other people. I'll tell you, I'm pretty upset about that, and I'm telling you all, especially if you have a small business. This is something that you ought to look out for. Now, the tough part about it is there's nothing too much you can prepare for. Apparently, the research I did, it's coming from more than likely Eastern Bloc countries, maybe China, and these guys are experienced. They come in, and it's not just one or two people. They may do 100 at a time or something like that, and it's insidious. You need to look at your bank account for not only to see how you're doing, but also to see if someone is taking your money. You typically take a small amount, maybe $25, $50, but first, before they do that, they'll take what I call a tester amount, maybe $75, maybe $1, and if they don't get any response from you, they'll try it again. Then they start the cycle, and every month or 2 months, or depending on how greedy they get, they'll take maybe $25 a month or $50 a month. So unless you catch it, that adds up. And then when you finally do, of course, there is someone else who's a victim just like they are at the other end. In this case, it happened to be me. Now, what am I doing about it? I've contacted the Federal Trade Commission. I've also filed a police report. Basically, I'm just protecting myself to say, hey, I'm a victim too. And that's all you can do, because the only other thing you can do is change your company name. I've invested too much time to do that, and it would be, I guess, I might as well close my doors if I changed my business name, because I've been out in the business world so long, I've been on the internet so long, so I just have to make sure that if anyone has had that issue and their money has been taken, then I have to let them know it wasn't me. So I've taken some steps to do that, but I just wanted to let you know that I'm a real business just like many of you out there, and I experience those same things, and I try to give you tips on how to protect yourself. I had another person tell me, when it comes to bank accounts and why you should check your bank account regularly. Now, regularly is I guess depends on you. I look at mine almost every day, not to make sure that to see if I have any money, but to make sure there's activity that I didn't plan. Now, there's another scam that goes through, and what happens is, again, this entirely different crew or organization, they'll take out, again, $5, and they may identify themselves as a charity, and they'll come back the next day and they'll take out $5 to see if anyone's looking, if anyone's checking. Then they go for the heart, and then they will take out $5,000 or $10,000. Well, if you just check your bank statement every month, you won't see this until it's already gone. The money it comes out, it goes into an account, and then it's wired out of the country, so that money will never come back. So it's on you. Now, the banks will reimburse you, but you have to make sure you're diligently looking at your account. So you want to look for anything that's out of the ordinary. Did you purchase something? Do you let your employees use a company card? And if you do, then you need to have them itemize what they buy and tell you when they buy it. If not, then you could be opening yourself up to some type of identity theft or actual theft from the bank account. I know I'm spending a lot of time, but this is something that small businesses should know, and tips for not only a business, but also for you, an individual. The same thing can happen to you, John Q. Public. You can have a bank account and they can go in and look at your bank account and take out $5. One typical scam that I have heard of is that they take out 50 cents or a dollar, maybe $2. Nobody notices those. They think that's some type of bank fee. And if you spread that out over, let's say 10,000 people, which is very possible, then that adds up to a lot of money. And that comes out every month until someone wakes up and stops it just on that one account. Now, how do they get these? They hack, big places that have data. Maybe a shopping, a department store, maybe a grocery store. Everywhere where you might use your debit card or credit card and that information is stored, there is a database. And these guys work and work until finally they can hack that database. They may not necessarily divulge that they have the information. Some of them like to kind of boast that they broke in, like they did a little while back, and show celebrities personal information. Now, that's a different type of hacking. This was just to show how good they were. That's not having an illegal business purpose as these hackers do. So a word to the wise and a tip, a financial tip as well as a tax tip on this tax identity stuff. Always check your bank account on a regular basis and define what regular should be for you. Regular should be every day, every couple days. Now, again, your bank normally will refund back any money stolen from you within a 30-day period. So, you're kind of covered there. But it still takes time to put that money back. And if they wipe out your account and you have no money, even for a few days, that's going to be a little bit uncomfortable. So if you take the time to look at your account every day, and again, now you have to look at it in a safe environment. If you go on your computer, make sure you keep your security network up to date as best as you can. We'll see you after the break. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
This segment's sponsored by Mucho Macho Michelada. Whenever you got to spice up your beer, Mucho Macho Michelada is for you. Only real men.
Did you say mucho macho?
Mucho Macho, baby, where the real men come to drink.
Hey, I don't always drink michelada, but when I do, I drink mucho macho michelada.
If only Arvin could be a little more mucho macho.
Will it put some hair on my chest?
No, but te quema entrando y saliendo.
The experts know that for pastry, Baker's Bodega has it all. Exclusive brands like Westco Bankmart, Satin Ice, and Pastry Pride. One-on-one day seminars for cake decorating and gelatin art. So for our service, wide range of ingredients and supplies, and for the low prices, Baker's Bodega has it all. But you don't need to be an expert. Baker's Bodega, 7869 Paramount Boulevard in Pico Rivera. Come, we're waiting for you.
We are the Three Guys Rant.
With Arvin, Mike, and Phil.
Coming to you on the Rant Radio Network every Monday from 6 to 8 p.m. Pacific Standard Time. You can call us at 855-69 The Three Guys.
It's not the Three Guys. This is why you should turn in, because one has Tourette's. The other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69-3-GUYS. G-U-Y-S and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Welcome to the Monster Marketing Group, your one-stop shop for all your marketing needs. Anything you need to make that marketing and advertising campaign stand out, we're your people. Concepts, design, production, social media, anything that you can dream up, we're going to make happen for you. And we can do it in a very quick turnaround. Please give us a call at 888-49-MONSTER.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on rantradionetwork.com. That's rantradionetwork.com.
Check it out.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back. Again, we'd like to hear from you. Give us a call here at rantradionetwork.com. Give me a call at 855-693-4897. Tax season, we're now down to almost 6 weeks. And all that means is April 15th is coming up close. If you haven't filed your taxes, consider it. If you have, let's look at either you got a refund, but maybe you could have gotten a bigger one, or if you owed, maybe if you did something different, you would not have owed and you would have gotten a refund. And speaking of refunds, I'd like to talk about something IRS has put out. It says that over $900 million, almost $1 billion, is waiting for people who have not filed the 2009 tax return. Think about that. 2009. Here we are in 2013 getting ready to file our 2012 tax return. And there's a couple significant issues there if you haven't filed your 2009 tax return, and that is the statute is about to toll for your federal return. And I'll talk about that a little bit later. But I wanted to talk about this and how IRS is looking at this, because if that money isn't claimed, it sits. You still have it until the statute is told, and then it may go away. It may not, but you may not be able to get that refund from 2009. On average, it's about a $500 refund. Now, I'm looking at California. California, it is estimated that over 100,000 people haven't filed their 2009 tax return for whatever reason. Maybe they forgot, maybe they moved, maybe they are afraid that they're going to owe. I get clients that come in who haven't filed for several years, and they feel that, oh no, I'm going to owe, therefore I'm not going to file. And once I file the returns, probably 70-80% of the time they would have gotten a refund had they filed. Now, some of those years they may owe, but it's never as bad as it seems, and they kind of leave money on the table. But getting back to California, that average refund is estimated at $518. Roughly, that's about $92 million that is waiting for those 100,000 plus people. If you happen to be one of them, hey, think about filing. If you happen to know one of them, tell them to file. If they need help, give us a call. I'm here locally. Give me a call at 562-864-2341. We do tax returns. We do representation before IRS, Franchise Tax Board. We deal with the government all the time. Now, looking at this, the IRS also says they send out a letter to your last known address saying we think you should file, or we haven't received your tax return, and you have a credit, and you could have a credit if you had a job, you had a W-2 wages, and you had withholding. So since they don't know how much you may owe or how much your refund is, you have a credit until you filed your tax return. And that's what the letter will say. So they will send out that letter to your last known address a couple times. If it comes back because you've moved, not left a forwarding address with the post office or whatever, then it just sits until you file. Now, if you get a job somewhere, eventually that will match up. And It takes time though, because what happens is your new employer submits the information, submits a new W-2. It goes to Social Security. Social Security notifies IRS, and nothing happens until you file a tax return. Or if you haven't filed a tax return, Social Security notifies IRS just in a routine manner that you have a W-2. IRS sees it that you haven't filed. They have your new address, and they will send you another letter saying, hey, you haven't filed for this year. Now, earlier I had mentioned that what may happen is the statute will toll, and typically, unless something happens, you have 3 years to file a tax return in order to get a refund. Once you file the tax return, and I'll back up a little bit, if you file your tax return by April 15th for your 2012, by April 15th, 2016, that will toll, which means that you can't go back and change it unless you have, under limited circumstances, such as a net operating loss or something that will carry back, and also IRS cannot look into it unless there's an instance of income omission or some type of fraud. So we're going back to 2009. You have 3 years from that 2009 year when it's due to file and claim that refund. After that, the rules say that that refund, even if you have one, will not be given to you. Now, if you owe money, it doesn't matter. All bets are off. If you owe money, that it's due. But if you have a refund, IRS will keep that refund. If you owe money, you will receive that bill with interest and penalties on top of it. So if you know anyone who hasn't filed, if you know anyone who's afraid to file, or even if that's you, think about it. You know, you need to go out and to file. Now, I've been looking for crazy tax laws, and I found one that had to do with playing cards. And this one is from the state of Alabama. Single decks of playing cards. There's a unique tax, and what that is, there's an annual license of $3 and a fee of $1, and that's for playing cards with decks of no more than 54 cards. Nobody knows how this law got enacted. It's suspected as from an earlier time when people would put more cards in that deck. So, you get to that whole thing of card sharks. So you might have a deck with 60 in there. So you have, 5 aces or 6 aces and 5 kings and something like that. So that was to kind of stop that from happening. Anyway, that was my weird tax law for the day, and I'm looking for others. Most states and most countries have them. I kind of look for something out of the ordinary when I try to find these things. One of the things I like to do is try to find out why they enacted them, if possible. Some days I can, some days I cannot. So that one, we have that. I want to talk a little bit more about a different subject, and that's California. I don't talk a lot about the California changes in laws because California generally goes along with the federal. If it brings in income, California goes along with it. If the federal denies it, California will deny it. So California is what's called a cookie cutter, a net state, and what that means is whatever the adjusted gross income of the federal is, that's what California starts with, and then it adds or subtracts from that. So there's not a lot of difference in California tax law. Now, California has tax laws. Some are significantly different when it comes to like the treatment of depreciation and some income items and so on. So not to say it's going to follow all the way, but most of the time, California, you can kind of guess that if it's going to bring money into the state, California is going to go with it. If it's not, then California is not going to go with it. The one thing that changed and is significant, if you've heard and watched in the news about celebrities and wealthy individuals leaving the state, and that's because California raised its maximum tax rate from 9.3 to 10.3, and it also on incomes of more than $1 million, but also it created, by doing that, the top bracket really becomes closer to 13.3%. So if you're in the top federal bracket of about 35, 36%, on top of that with California, yeah, you're looking at close to almost 50% in taxes between federal and state, and that's why a lot of celebrities talk about, and some have actually acted on, either leaving the country altogether or just leaving California and moving to states like Nevada or Florida in particular, more likely Florida, because Florida has different laws when it comes to bankruptcy and also property rights, and Texas, because also Texas does not have a state income tax. So I wanted to give you that about California tax laws, and let's talk a little bit about a saver's credit, or what you can do in terms of reducing your taxes today. We'll talk a little bit more about that when we come back after the break. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
Welcome to the Monster Marketing Group, your one-stop shop for all your marketing needs. Anything you need to make that marketing and advertising campaign stand out, we're your people. Concepts, design, production, social media, anything that you can dream up, we're going to make happen for you, and we can do it in a very quick turnaround. Please give us a call at 888-49-MONSTER.
What up, foodie freaks? It's Chef Bev Lazo with the Culinary Trend Show. Join me and my brigade every Thursday night from 8 to 9 p.m. where we will be cooking up some crazy stuff that will give you the appetite for discussion. It's all about the good food, good friends, and good times. Only here on RantRadioNetwork.com.
We are the Three Guys Rant
with Arvin, Mike, and Phil.
Coming to you on the Rant Radio Network every Monday from 6 to 8 p.m. Pacific Standard Time. You can call us at 855-69 The Three Guys.
It's not the Three Guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69 3 Guys, Guys, and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on RantRadioNetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
This segment sponsored by Mucho Macho Michelada. Whenever you got to spice up your beer, Mucho Macho Michelada is for you. Only real men.
Did you say mucho macho?
Mucho Macho, baby, where the real men come to drink.
Hey, I don't always drink michelada, but when I do, I drink mucho macho michelada.
If only Arvin could be a little more Mucho Macho.
Will it put some hair on my chest?
No, but te quema entrando y saliendo.
This segment has been brought to you by Coco Cafe. It's a cafe latte coconut water with espresso. And I came across this wonderful little drink just recently, and it has to be one of the best things I've ever had. I'm pretty obsessed with cocoa water and espresso, so the thought of it together was a little bit, I wasn't sure what I was going to get, but my gosh, let me tell you, it's super tasty. It's made with natural coconut water, a strong shot of espresso, and a splash of reduced fat milk. You can visit them online for more information at drinkcococafe.com. Once again, I want to thank everyone at Coco Cafe for being a sponsor of this radio show. Thanks so much.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, everyone. We're on rantradionetwork.com. Give me a call. I'd like to hear from you. 855-693-4897. Or send me an email at asykes@sykesaccounting.com. What I was talking about earlier is how can you save some money and set your own retirement plan? And one way is the Savers Credit. What the Savers Credit is, it is IRS, or actually the government's way of helping low-income people. And when I say low-income people, and this is by their definition, if you're earning between, and that is a married couple earning $59,000 or less, head of household earning $44,000 or less, and married individuals filing separately, it's a lot lower, but $29,500 or less. You can get a credit if you open up an IRA and deposit that $2,000, and so it also gives you another incentive. As you know, an IRA is an individual retirement account that was set up years ago or created years ago by IRS. To me, kind of a way to set up your own Social Security account. There was a lot of talk years ago about Social Security going away or having major changes, and so the individual retirement account was set up so that everyone could have a hand in their retirement. And by that I mean everyone could set aside some money to supplement their retirement. So if their job, if they were working, didn't have a retirement plan, because a lot of companies at that time were doing away with the retirement plans because they were too expensive. So the workers were just kind of left out there. After 30 years with one company, boom, the retirement plan was wiped out. They gave you a check for $20,000, said have a nice life, and all you had left was Social Security. There was a lot of people kind of dumped out like that. So Congress came up and said you can create your own individual retirement account called an IRA. So that's sort of a little of the history on it. A lot of people did. Unfortunately, you had to save up the $2,000. And then mutual funds got into the act, and that was good. They will allow you to invest as little as $25 a month. Now, obviously, that's not going to add up to $2,000, and actually, you can set aside as much as $4,000, but the credit is only available on $2,000, and you have to meet these other guidelines, which I'll talk a little more about later. But the basis of it is people who had more disposable income were able to put that $4,000 away, or $2,000 at the time, and take a tax deduction. Now, it was what's called a above the line tax deduction. That is, in calculating what is called your adjusted gross income. So that means your interest, your dividends, your net profit from your business, all that was added, and then from that was subtracted your IRA deduction, and then your itemized deductions, and then your exemptions, and then the tax was calculated. So you actually got a better uh, bang for your dollar because it was higher up and it actually offset some income that you may have had. But one of the keys to that, one of the requirements, you had to have earned income. So if you had, 20,000 in interest or dividends or capital gain, you could not deduct an IRA because it was only for earned income. It was to help people who had a W-2 earnings or who had a small business, something like that. It was not designed for the investor. An investor is someone whose earnings, whose income comes primarily from payments from other things, but not necessarily from them actually doing the work, even though I know a lot of landlords who feel they do a lot of work, but that's a different subject. Now, what the credit is, the small savers credit, that actually is not only do you get the deduction, but you get a dollar for dollar reduction in your taxes or a reduction of your or an increase in your refund, depending upon where it falls because of this. And that makes it all the more better. So if you are if you are a low income, and I'm not sure I like that word low income, but if you make less than a certain amount, it's the government's way of trying to help you to set aside a retirement for yourself. Just in case Social Security, one, is not going to be there, or two, it's not going to be enough. And chances are it's not going to be enough. And now you have your own account where you can invest in and do this. So the mutual fund companies have stepped up and said, well, we have these vehicles that will invest, that you can invest your individual retirement account monies in, and they will grow. Now, in future shows, we'll talk about how monthly investing can help you. I may have a couple guests who can talk about it a little better than I can, but what I want to do right now is just give you an overview. I want to talk about how the Savers Credit, how it works. Even if you may have a small 401k with your company, if you're not putting in the maximum amount, it may be possible you could get this. Now, 401k is best because a 401k or any plan that has you invest the money before you receive it, that is, that comes out of your paycheck before you receive the paycheck, and because that's the best way, your taxes are even lower. And as an example, let's say you earn $500 a week and you have a 401k. Your 401k, you're investing $50 a week in that 401k. Now, you are taxed only on $450. That $50 is gone out even before the taxes are calculated. However, Social Security is taken out on the $500. So you don't escape there. But think about it: you get credit with Social Security for the $500, even though they're going to take the money out. But when it comes to income taxes, you only made $450. So your tax withholding was based on $500. So that means they've taken out a little more tax than they had to, and you now have a possibly a built-in refund. So the government is actually paying for part of your retirement when you have a 401k or any type of or a 403b type product if you're a teacher or if you work for a government entity where you are contributing money before your withholdings. So that is the best plan. So if you have that, one of the best tips to look at is just investing in that and building up your 401k, because your taxes will come down, your refund will grow, and you will have more money when you need it, and that's when you retire. Now, of course, the problem is living from today until you retire. So you have to use some common sense there and figure out how much you need so that you can reduce that and put more into that 401k. Then you need to look at that 401k and make sure that it is investing in those investments that are going to grow, that are safe, so that your money will be there when you want it. It will grow, and you will have everything for you that you need. But getting back to the Savers Credit, because this is the same type thing. This is the same idea. The Savers Credit is the individual retirement account that you set up with your bank or with a mutual fund, and you put the money in. Now you can deposit it monthly, which is probably best. That way you get used to it. Unfortunately, it is going to be with money after you get your paycheck. Sometimes you can have it come directly out of your paycheck, but most companies don't do that. You can have it come out of your checking account if you have direct deposit, and then you have it coming out of your checking account. Technically, you don't see it or feel it, and so you won't miss it as much as if you actually get the check in your hand and then have to send the money off to the mutual fund. The best way to go is actually have it come out of your checking account so you don't really know what you have. But the beauty of it is you will get a credit, and that credit can be a couple $100 to for a joint account, or $100 or so for a single individual. And that's something that you look at, and that's going to be a dollar for dollar credit. There's a tax form, Form 8880, and that's used to claim your Savers Credit. I'm looking here. The average credit was about $204 for joint filers, as I said. A head of household was $165. Doesn't seem like much, but again, that it can increase your refund or reduce any tax you owe. Plus, you get a deduction for that IRA. So you kind of get two birds with one stone. That's something to look at. I'd like to invite you to give me a call, not only here, but call my office. That's 562-864-2341. What we do taxes, we do business consulting, we do financial consulting. We help you get to where you want to be. And I don't talk a lot about all the services that we offer, because I try to have you look at my network, not my network, but my website. And I invite you to look at it. Please go to www.sykesaccounting.com. Take a look at our website. Sign up for our newsletter. We give a lot of tips on that. I'm hoping they're helpful. I would like to hear from you. Give me an idea on what you want to know, or give me a call. We review most returns from other places. My number is 562-864-2341. I'll see you next time. Thank you. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.